Welcome back, dear traders. The main fundamental driving stock markets and Forex is that the US economy remains the strongest in the world, so the US dollar is supported fundamentally. Besides, US Treasuries are enjoying beyond demand from foreign investors. Today, yields of the benchmark 10-year Treasuries rebounded from their 2-month lows. It seems that Black Friday boosted the popularity of the US Treasuries because yields of 10-year bonds jumped by a few basis points and instantly tested 4.48%. US stock markets are closing earlier than usual today, so volatility could be subdued. However, this will hardly influence market sentiment. Market participants are still 100% certain that the Federal Reserve will hit a pause button in its monetary policy at the meeting in December. Curiously, Wall Street investors have something to be grateful for in Thanksgiving Day. For example, the Nasdaq surged by 11% this month and by 36.3% in 2023. The S&P500 has climbed by 8.65% in November and 18.7% since the beginning of the year. The chart of the broad profile index shows that the index has been steadily growing for the last 2 weeks. Today, it stands at 4,556 points, and the S&P 500 and the Dow Jones have added 0.9% this short trading week. The Nasdaq has grown by almost 1%. The S&P 500 is expected to trade in the intraday corridor between 4,545 and 4,568 points. Futures on the stock indexes traded in the red in the New York pre-market. As it often happens, the dynamic in the pre-market does not always coincide with the regular trading hours. The catalyst for the rally on the Wall Street is stocks related to artificial intelligence and its products. The brand new industry generates solid profits to microchip developer NVIDIA and high-tech giants such as Microsoft, Amazon, Meta and Google. Besides, AI gives ample opportunities for pumping up corporate earnings. US top retailers will come under the spotlight because Black Friday is the opening the season of Christmas shopping. However, large retail chains such as Target and Walmart have already warned that consumer demand moderated. The US dollar has failed to settle at the highs of the week. Its vigorous rally following the strong employment data did not find support from other economic data. Other statistics were much weaker, so the US dollar index dropped to 103.50 from 104.20. Since then, the index has been consolidating within the borders from 103.5 to 103.80. The instrument has already fallen by 2.8% on the back of expectations of the pause in the Fed's interest rate moves. The main driving force for currency markets is the prospects of the US economic growth. Meanwhile, the Canadian dollar found support from fresh economic data. Retail sales in Canada climbed by 2.7% in September on a year. It's the fastest growth since April. Retail sales grew by 0.6% from a month ago. So the Canadian dollar also enjoyed its Black Friday. It instantly strengthened to 1.3657 against its American rival. This reinforcement could be short-lived because US PMIs are due an hour later. In the meantime, the USDC DPI is trading inside the intraday corridor between 1.3649 and 1.3712. Bitcoin has been consolidating below the critical resistance level of $38,000. The intraday corridor today is outlined between 37,257 and 37,972. The flagship crypto maintains the bullish momentum, though it's fragile. The rally of the number one crypto has been stalled since November 9. The landmark level of 38,000 is a hot nut to crack. At the same time, all subsequent retracements have been shallow and short-lived. In other words, investors just buy at price dips during consolidations. All in all, Bitcoin is accumulating energy for a further bullish sequence, and the overall bullish trend of the main crypto is not over yet. The uptrend is fed by hopes of crypto investors that Bitcoin spot ETFs will be eventually green-lighted. You have watched a video review of the North American session. Your comments and any feedback will be appreciated. InstaForex team wishes you gainful trades and a nice weekend. So see you online next week.